Good morning, everybody. A minute and 20 seconds to go. I'm going to do the minute silence for Armistice Day at 10:59, so we can actually start the stream on time. So, if you don't know what Armistice Day is, it's the 11th hour of the 11th day of the 11th month. Good morning, everybody. How are you? Why have we got how many apples do you want to eat at the top of the screen? There we go. Welcome back to Crypto Warehouse. My name is Mike. It is the 11th day of the 11th month. It's November the 11th, 11 a.m. and we are back with another show. Now, there's a lot to get through today, but we're going to do it in a slower fashion than we normally do on a Monday. Monday is full of charts. Monday is full of talking about predictions and wherefores and hows and all that kind of good stuff. And today we're not. Today we're going to have a chat. And the reason we're going to have a chat today is because I don't want to have to pile through everything and basically just read off a list of things. I want to have a chat today. Now, before we do anything, before we even say hello to anybody in chat, the most important quiz you've ever played in your life is tomorrow night. And that quiz is a dog quiz, okay? We've had cats. That was a good one, even though maybe some of the world records didn't exist. And I know the Oracle was mighty miffed about that. But we've started to do the dog quiz. Now, it's probably going to be 20-25 questions about dogs. Maybe a few meme coins about dogs will be thrown in there for good measure, especially for some of you who are degens. We're going to maybe have some of those questions. We're also going to have questions about sad things to do with dogs, world records for dogs, good things for dogs, and why we are dog people. Now, that isn't a picture of our dog because it's not quite ready yet, but we will have a picture of our dog on the stream. So that's going to be tomorrow night at 7 o'clock p.m. Central European Time. I haven't quite decided if we're going to stream it on Binance or not yet, actually, because it's not actually anything to do with crypto. It's just dogs. But we'll see. Maybe we will. Now, prizes. We're going to give you somewhere and somehow dog NFTs. And there's going to be a lot of people winning. Depending on how many people turn up, you might all win a dog NFT. So, if you want to win a dog NFT tomorrow night, you will need two things. You will need your brains, or in some cases your luck, and you'll need a Kronos chain wallet address for us to send the dog meme to. This is not a sponsored stream. We are not doing this in association with anybody. We haven't even chosen the NFT project yet, but we will be giving you dog NFTs. And it may be dog NFTs from a dead project. That's where we're at right now. But that's tomorrow night, and that's going to be a load of fun. Now, there's a few people in chat, including a couple of reprobates in chat. I believe somebody called Brogan is in chat. I don't know why he's here. KB is here. Kishan is here. Hidden is here. Danny is here. Good morning. We have some new people. Bullish Bull is here. We have Bane. Not sure you're the same Bane. You are here. Manjeet is here. I hope you're all doing really, really well. And for those of you that are new here, you need to A, smash the like button, B, comment in chat, and C, give us a follow. It is like a barren wasteland on YouTube at this moment in time. There is very little going on. We're trying something different. We're putting some shorts out. We've bought some software to do that with. We're starting to put more shorts out on YouTube, and they seem to be doing quite well. So maybe the 60-second generation are going to save the channel on YouTube. Now, let's go and have a wee look at what we're going to be talking about today. We are going to be looking at, there we go, a report from Yardeni that is about the rally, the S&P rally, the crypto rally, the Bitcoin rally. We're going to talk about Bitmine again. Tom Lee, we only spoke about him yesterday. The guy won't go away. He's like a bad smell. We're going to talk about Stripe. We're going to talk about Plasma and some of their partnerships. I've been telling you guys for weeks to not fade Plasma, okay? It is not a pump and dump. It is not one of these coins that just appears out of nowhere, runs up and then disappears again. It's a bona fide layer 1 stablecoin blockchain. You need to look at Plasma. It's important. We're going to look at XRL, which should be XRPL, and Gemini, the partnership they've got there. We're going to look at Binance bots in a good way, not a bad way, and we're going to look at the Bank of England and what they've had to say. And if you are KB, you should be shaking in your boots, KB. That's all I'll say to you. Also, the fact that Rachel Reeves is the Chancellor should also cause you to shake in your boots. Now then, should we have a look at some prices? Oh, and the title of the show today is Bitcoin Rejection. We said yesterday, did we not? We said yesterday that we need to break, and we didn't. And we came down a little bit, and we're back at 105,000. It's not the end of the world. I think if we can hold 104, then we can have another run at it. But I did say on yesterday's show that if we get rejected, we're likely to come back down to 104,000, and that's exactly what happened. And if you watched the Oracle show last night, he'll have given you the breakdown of all of the charts, all of the price action. If you don't watch the Oracle, I really don't know what to say. It's like, if you don't watch the Oracle, it's like punching yourself repeatedly in the head, wondering why things happen. You watch the Oracle, and that urge to punch yourself in the head just disappears because he explains things to you. Okay, now I'm not going to say too much because he's in chat. But anyway, Bitcoin coming in at 105, Ethereum coming in still 3.536, not too worried about that. XRP just under $2.50, again, not too bad. Getting a bit concerned about my Solana bags, okay? We need to see Solana move, but of course, nothing moves until Bitcoin moves. But I would like to see that closer to $200 at this moment in time. The Dogecoin, that might be in the quiz. That might be in the quiz. I do say that we give you a little hint on the show before the quiz. Dogecoin is likely to be an answer to one of the questions. We haven't written the questions yet, so it's hard to say which question it's going to be the answer to, but you'll know it when it pops up on the screen. Cardano has fallen below its 60-cent safe space. Hype is back at $40. If you are interested in Hype, and we do come lower over the next week or two, if you can get into Hype at $34, $35, I don't think that's a bad shout. However, we are likely to see the government lockdown end. We are likely to see some hopefully positive CPI data come out on Thursday and Friday, and PPI, whatever it's called, coming out on Thursday and Friday as well. So maybe we're never going to see a $34 or $35 Hyperliquid. I don't think it's a bad price at $34, $35, but I think if you're buying at $40, you're going to be very disappointed if you think it's going to go to $200 or $300. In my personal opinion, by the way, it's not financial advice. I just don't see that happening. Chainlink at this $16 price is an absolute steal. I still hold out hope that that is likely to go up towards, I don't know what I've said, $80 to $100, I think, for Chainlink. So that's a 5x from here. Again, if this bull run is delayed, we've still got plenty of time for that to happen because it's a round trip. It's not going to be up very long at those prices, maybe a week, and then it's going to come back down again. Remember, all-time highs happen for a very short space of time. You could blink. If you are going to go on holiday for 2 weeks in November or December, bring your phone with you because you're likely to miss it by the time you get back. Right then, let's have a look at the gainers and the losers then. Uniswap is up on the fee news. They have announced a big change to fees, so that has pumped considerably. Aerodrome, anything below $1 is a bargain at $1.18. Official, Trump is up. Do not please go anywhere near any of these tokens. Not my financial advice again, but don't go near them. ASI is starting its slow road to recovery back at 40 cents. That is nowhere near that project's potential. It is not even at $1 billion market cap. That project is easily easily 5 to 10 times the size of where its market cap is right now. And I hold a bag, and I've never sold my bag. Pretty much held it since we started talking about AI projects 2.5 years ago. Other gainers then, Pancake Swap. Gold is up. Peter Schiff will wake up a happy man. He'll think it's Christmas this morning. Losers then, I'm not going to tell you I told you so, but Zcash is going to go to zero. Back at 485. Again, it can keep continuing to go up, but people are starting to talk about a $1,000 and $2,000 Zcash price. That would give it a $15 billion market cap if it went to 1,000, and it would give it a $30 billion market cap if it went to 2,000. And just to put that into context, that would put it into 8th position. So it would be more valuable than Tron and Dogecoin and Cardano and Hype and Chainlink. I smell horse manure. We've heard all of this before. Coins go up, people give you unrealistic targets. We saw it with George last year. George last year told us that we would have a $500 or $1,000 Solana at the end of last year. We got nowhere near it. We're not going to go anywhere near $2,000 for Zcash. Not right now, we're not. Maybe in 5 or 6 years' time we will. So be very careful when you listen to people give you price predictions, because it's not the price that they're going to be selling at. The people that are telling you that Zcash is going to $1,000 are the people selling Zcash at $550 and $600. They're not going to tell you to sell before they sell. That's the entire point of what they do. So be very careful when you listen to anyone's advice on price predictions. My personal opinion is that is not going to go to $2,000. Starknet is up off the back of everything that's been going on with Zcash and privacy coins. That's now retracing back to where it should be. Dash, another privacy coin, that is down, near giving up some of the gains. Some random coins pumped. I don't know, you probably noticed this over the last few weeks. And I did mention yesterday there was a rumor about why that happened. And I'm still not ready to tell you what that rumor is, simply because I don't quite believe it yet. Until somebody comes out and gives some actual hard proof, it's a rumor, and I don't really like to deal in rumors. ICP is down. Monero, another privacy coin, is down. I don't know what you want me to say. They're all going to pump as a market. Dash pumped. It's like barking dogs. One of the dogs starts to bark because it heard a leaf rustle, and it's standing there barking away, and all of the dogs have no idea why it's barking, and they all just join in and start barking as well. Okay, now there's probably a name for that might be in the quiz that we're going to do tomorrow night, but we'll see. Strategy has bought another 487 Bitcoin for just under $50 million at $102,500 per Bitcoin, has achieved a Bitcoin yield. Creative accountancy. It now holds 641,000 Bitcoin. They have an average price of $74,000. We're going to cover somebody else that's bought Bitcoin again in a minute. Now, the big thing about this is, if you are worried about the price of Bitcoin, if you are thinking that Bitcoin is going down, I will say to you, if Bitcoin is so poor, if Bitcoin is such a terrible asset to hold, why do all the big people in suits buy Bitcoin? Why do all the people with beautifully manicured beards, why do they all buy Bitcoin? Why are you selling when everybody that has all of the researchers and all of the dev teams in the world sitting behind them buying Bitcoin, and you're sitting there in your room going, you know what, I think I'm going to sell my Bitcoin? If there's one asset that you should hold for as long as possible, it's Bitcoin. That's the only one, the pristine asset. And as I said on yesterday's show, and coming back to this, my worry over time is that strategy becomes a threat to the price of Bitcoin. It will never threaten Bitcoin. It will never crush Bitcoin, but it will become a threat to Bitcoin if they over leverage themselves, because selling 641,000 Bitcoin will put a big dent in the price of Bitcoin. They're not likely to do that at any point in the future, but I really don't want to see strategy holding 1.5, 2 million Bitcoin. I don't think they'll ever get there, but I really don't want them to do that. It's too much of the circulating supply. And remember, people keep telling you there's 21 million Bitcoin. There isn't 21 million Bitcoin. That is the biggest lie ever told in crypto. Satoshi has 1 million. That's gone forever. There's probably anywhere between 1 and 4 million Bitcoin lost. So now we're down to maybe 17 million Bitcoin. Bitcoin is lost on a regular basis. Every week, month and year that goes by, more Bitcoin is being lost because it's sold to the wrong address. People lose access to their accounts. Look at the famous Max Keiser. He gave people 1,000 Bitcoin to get them into crypto. Russell Brand was one of the famous guys. Russell Brand's lost his login details. He doesn't know where it's gone. There are many other people like that. Max Keiser probably could be responsible for another 100,000 Bitcoin going missing. The guy that lost his laptop in the refill dump in the UK, his Bitcoin's lost forever. There's a lot of lost Bitcoin. So it's a lie when people tell you there's 21 million Bitcoin. There are 21 million Bitcoin that will ever be produced, which we will never get to the end of that. But in circulation that you could physically get your hands on, there's more than likely 16 or 17 million left. That's how scarce this asset is. So when you see Strategy buying Bitcoin and you are sitting there thinking, I don't think it's going to go anywhere, I think it might come down, I think you will find yourself slightly on the wrong side of history when it comes to Bitcoin, as Peter Schiff has been for the last God knows how many years. Now Vivek, I'm going to murder his surname, Ramaswamy, I think that's how it's pronounced. His company has just bought 1,567 Bitcoin worth $162 million. Again, Vivek, Donald Trump, World Liberty Financial, stablecoin. You can tie it all together. It's not Robert Kennedy. What's he called? Bobby Kennedy Jr., whatever he's called. His company, his family all got Bitcoin. Eric Trump. They're all in the same boat, which is to buy as much Bitcoin as possible. Don't be the person that doesn't hold Bitcoin. Don't be the person that turns up to the party without a bowl of potato salad. Don't turn up empty-handed. Hold your Bitcoin. Now then, John Brown, I follow this guy. Now, if you're wondering who he is one of these traders that always tops the charts. Now, I'm going to click on his face. This is not promotion, by the way. I've been following him for a very, very long time. Now, I don't know whether that's a true representation of his face, because he looks like somebody from the 1800s. But it is irrelevant what he looks like. The man is a genius. And he always puts out a lot of these very, very kind of philosophical statements that I like from time to time. I put them in the stream. Permanent comfort is not luxury. Luxury is the ability to alternate between comfort and discomfort at will. Now, if you take the word comfort out of his statement and replace it with wealth, permanent wealth is the ability for you to decide whether you should have comfort or do something that takes you out of your own comfort zone. That's what wealth does. So when he puts these things out, don't read comfort, read wealth. If you have enough money, there's another very famous quote with that John guy. It's called FU money. You need to own your own house. You need to have a few $1 million in the bank. This is in America, of course, that pays you 5% yield. And that's FU money. That's what it's called. And FU money means you can go into work the following day and your boss gives you attitude and you just say FU and you walk out because you've got FU money. I want every one of you at some point in your life to get to the point where you've got FU money. Okay? And this is the reason why. Because then you can decide in your life if you want to go through something which is of great discomfort to you. Running a marathon, climbing a mountain, learning a new skill, taking up boxing, whatever it might be. Money gives you the option to live comfortably, and it gives you the option to have discomfort. And that's what people miss about having wealth. Now, Cardano's key stakeholders have accumulated big since the drop below 50 cents last week. In the past 4 days alone, whales and sharks have accumulated 348 million ADA at $204 million and accumulated 1% of the supply. Again, when these dips happen, what happens? Everybody tells you Cardano is dead. Cardano is finished. It's a zombie chain. Right? And then these things happen in the aftermath. Okay? When people are telling you that crypto is on fire and everything is going to go through the floor, I sit here and tell you it's an opportunity to buy the dip. And the reason I tell you to buy the dip is because the whales buy the dip. The whales, the rich people buy the dip. The strategies of this world, the Bitmines of this world. Tom Lee, he wet himself with excitement on October the 10th because Bitmine went and bought about 200,000 Ethereum or whatever the number was in the end. That's what they do. Market comes down, buy. And then you know what will happen? Let's say Cardano goes to 150, 160, something like that. You'll start to see the opposite of this happen because they don't care about the cycle or the trend. They will sell at 150. And you know what? They bought at 50 cents. They've sold at 150. A few months later, they've 3x their money. And you're talking about $200 million here. We're not talking about $5 that you found down the back of your sofa. So bear that stuff in mind. When the price goes through the roof, that is when you should take profit. And when it comes all the way down, some of that profit you've taken, you should use to buy the dip. I'm terrible at this, by the way, because I buy and hold. I buy and hold. Buy Bitcoin, hold Bitcoin. That's what I do. Invest in Bitcoin, stack Bitcoin, stack. That's all I do. And when the dip comes around, because I haven't sold anything, because I'm not selling, I sit there and I just tap my knees and think, I wish I'd, had a few extra shekels on the side to go and buy Bitcoin with, but that's just the way I am. I hodl. Yardeni Research President forecasts imminent Santa Claus rally, details the S&P 500 target. Now, I've never heard of Yardeni Research. I don't know who they are, but they have given us an update talking about the Santa rally. Now, the Santa rally is something that does exist, and it is kind of perpetuated by the insurance industry, of all things. And what happens is, as we get towards the end of the year, reporting end of the year, the insurance companies don't want to show crap investments, basically. So what they do is, I don't know what month it is. It's September. They will sell off all of their underperforming assets in September. And then they will do their year-end report in October, I think, about now, maybe. And then at the beginning of December, they will then buy back those assets that have underperformed. And they do that pretty much every year. So that kind of reinforces the Santa rally. And the Santa rally is the stock market goes up by over 1% in December every year. But it's not every year. I think it's 70% of years it goes up by about 1%. But it does exist, and there is a reason it happens. It's not just 50-year-old men in suits sitting there looking forward to getting their retro BMX bike. It actually happens. So there you go. So the president of sell-side Wall Street firm Yardeni Research thinks stocks are currently in the buy the dip market. Ed Yardeni says in a new interview on CNBC that he thinks that's particularly true for AI stocks. I know there's a lot of nervousness about AI, but that's a good thing. In the late 1990s, when I was around during the tech bubble, followed by the tech wreck, I don't remember it ever being called the tech wreck. Nobody really saw the tech wreck coming. Yes, they did. Absolutely. I love people with rose-tinted spectacles. Everybody knew this was going to happen. Everybody knew this was going to be a crash. If he didn't know it was a crash back in the 1990s, I think lesser of this man. Nobody was really worried about a bubble in the market that I can recall, not the way it is today where everybody seems to be worrying about it. He's got rose-tinted spectacles. The bubble of the 1990s, and it wasn't actually just the bubble of the 1990s, it ran into the 2000s as well, was the fact that people were coming up with these ridiculous ideas for projects. This might sound familiar. Ridiculous ideas for projects. And then St. James's Place or somebody would give them $10 million or fund them for $10 million. And it would be a ridiculous idea, like paint all the swans green, for example. And that's their idea. No revenue model, no profit model, no roadmap, no runway, nothing. Just stupid ideas. And money was flowing around because people were like, here is $1 billion, go and put it into tech stocks. And then this person sits there who doesn't know anything about tech, is going around giving money to projects that fail. And that's why there is a tech bubble. It's not to do with the ideas or the people building. It's to do with the fact that there is a disconnect between people who know what's going to work and the people wanting to invest. And then you get these chancers coming along with these stupid ideas that will all go bust and all cause the bubble to pop. And the bubble popping is these businesses that shouldn't have existed going bust, and the people losing money saying, I'm never going to invest in the internet ever again. And here we are, 30 years later, and guess what? The internet exists and the people are still investing in it. So rose-tinted spectacles, not the way I remember it at all. But AI The issue with the AI is not AI itself, it's investing in the right AI projects, as it always will be. There'll be 100 AI projects and 99 of them will fail. And that is just the way it is. You have to understand that. And that is why you need to diversify. That's why we talk about when you get yourself an AI basket, you buy 6 AI tokens or 8 or 12, or whatever it might be, because likelihood is 4 or 5 of them are going to go to zero. Some of them will be a success today, some of them will be a success in a year. That's why you have to diversify. So when you see these absolute clowns on X screaming, I am all in on, I don't know, watermelon AI, okay, well, that's a stupid thing to do. You don't go all in on anything. That's why you shouldn't have all of your wealth in crypto. He argues that corporate earnings have been prolific enough to keep the market afloat, and he predicts that the S&P 500 is about to rally once again, crossing 7,000 by the end of the year. The basic bottom line of it all is we're in a bull market. It's been a volatile year this year, but at the end of the day, we're going to have all-time record highs in the market. Again, I can't disagree with this statement. I do think we are going to go above 7,000, and that's because we've got a lot of bullish news on the horizon. Of course, we've got the lockdown, interest rates, all that kind of good stuff. It's all going to come out. And I mean, there are things, there's other economic factors that are going to absolutely, draw this down. I mean, the UK, the basket case of the UK, which is Rachel Reeves, is let's introduce a minimum wage. Let's introduce increases to national insurance contributions. Let's introduce X, Y, or Z, and then wonder why unemployment's just hit 5%. But then the FTSE 100 and FTSE 250 and FTSE 500 are all pumping. And you know why that is? Because they're not taking on staff. When you see stocks going up and when you see unemployment going up, it's because the companies aren't employing people. They're just making more money. And then you have a socialist government in place who are going, right, how do we solve unemployment? How do we solve these problems? We put taxes up. And that's the way that it ends up being. And again, that's fine when you're in a good market and you can afford to do that. You probably don't need to do it in a good market. We're not in a good market right now. So then you have a situation where, I think it's called the Lafay curve. I'm going to go and find it. I'll probably cover it on Thursday or Friday stream. But basically you have a situation where, how do you fix unemployment and high inflation, everything else like that? You put taxes up. And everybody knows if you bring in a minimum wage into a country, what happens is the base cost of everything that happens in that country goes up. The person you buy your coffee off, the person who makes your sandwich, the person who drives your taxi, the person who does anything for you, if they're on minimum wage, everything you do suddenly goes up by 5, 10, 20, 30%. And if you're a socialist and you're happy with that, that's fine. But it's not going to make for a good economy in the long term, okay? If you've got the choice of an 18-year-old on £10.50 an hour or a 25-year-old on £10.50 an hour, and one's got 5 years experience and one's got 0, you're going to just have a load of 18, 19-year-old kids that don't have jobs. That falls on the government for bringing in a minimum wage. A minimum wage does not mean an increase in the standard of living. It means everything costs more, which is increasing inflation. Nobody seems to understand this on the left. And again, I'm fine. There's probably people out there who disagree with that, but that's just the way I see it. Now, Bitmain stock rises after Tom Leem's firm buys the dip, adding 385 million worth of Ethereum. Again, the Michael Saylor of Ethereum, he is doing a lot of rounds at the minute. I don't know if you remember, he was saying that Ethereum was going to go to $60,000. Well, he's now saying it's going to $20,000. So where did the $60,000 Ethereum go, Tom? Where's it gone? Because you promised people $60,000 and now you've changed your mind, haven't you? Like Rich Dad Poor Dad. You can't keep telling people prices that you've got no precedence in telling people what something's going to go to. You look like a fool. Like Rich Dad Poor Dad looks like a fool. That you can take all of these stupid price predictions and put them in a I actually can't say what we could do with them because I get turned off. But you understand what I'm saying. There's no recourse on these people. There's no kickback. If I sit here and tell you that Bitcoin's going to $300,000, you can come in here and give me grief. Who gives Tom Lee grief? He goes on CNBC and talks to a knucklehead who's no idea, and he goes, "What's Ethereum going to be worth?" $20,000. That's a good price. Thank you, Tom. And then he goes off. And then he goes on another show 6 months later. What's Ethereum going to be worth? $15,000. That's a good price. Thank you, Tom. Where is the pushback where somebody sits him down with all of his different price predictions, and Rich Dad Poor Dad and Michael Saylor and Cathie Wood? Where is the discourse to actually say to them, you are all wrong, and you've all been wrong for 2 years? Where is the person asking that difficult question? There is never anybody asking that difficult question. That is why you can look at the press and say, you're a load of idiots, because you just want the person on the show to fill airtime. There's no critical thinking anymore. It's a load of crap. I'm going off on one today. Villain Bear is in chat. Good morning, Villain Bear. Nice to see you have reappeared. Danny is saying, I'm going to read. I'm going through the questions, by the way, or the comments. Rachel Reeves is looking to tax the rich in a week's time, tax the crypto owners. I think the problem with Rachel Reeves is that there's a term that I really like called mid-IQ. And mid-IQ is basically somebody who's intelligent enough to sound intelligent, but lacks any mental capability to understand what they're saying. Okay, and they're called mid-IQ. And I love that term. I don't know who coined it. It's a great term. And it's somebody who can sit there and say, well, you know, the economy's doing really great and everything's going up and Labour's going to build back better. And literally everything is on fire. The housing market, the jobs market, the economy, everything's on fire. And the only thing doing well is the markets, because they've insulated themselves as best they can from Rachel Reeves. I think we're going to just put more tax on things, tax everything. But we're going to tax speaking, tax driving, tax the air. Okay? And what's going to happen is the Tories will come in, or whoever it is, Reform will come in, and they'll cut these taxes, and then the economy will bounce, and it will make the Tories look good. And that's the thing that the left don't understand. They're sabotaging themselves by having this socialist agenda, tax the rich, not work. I made a video about Gary Stevenson about this, and again, this is not what the show is about, but you have to understand, you cannot have a 100% capitalist market. And you cannot have a 100% socialist market, because neither of them work. You have to have capitalism to give people the motivation to go and do things. You also have to have a socialist element to look after the people who can't. And the problem in the UK at the minute is there are people classified as who can't, who can. And that's the big issue, because the system doesn't work. That's not the Labour Party's fault or the Tories' fault. It's all of them. They're all together, and they need to fix the system. And you can blame people on dinghies as much as you want, but the system's broke. That's why you're always going to have billionaires. And guess what, ladies and gentlemen? You're going to have trillionaires. And you know what comes after a trillionaire? A quadrillionaire, and then a quintrillionaire. Because the more money you print, the bigger percentage of that money goes to the top 1%. You're always going to get people with 1% in any market. And you can tax them as much as you want, but they'll leave. And good on them. Jack Dorsey Square launches Bitcoin payments. Jack Dorsey, I don't know whether he wants to model himself on Jesus Christ, but he does look like Jesus Christ. And some of the things that comes out of his mouth do make me say Jesus Christ quite a lot. But you can't knock Square, which is the company, the payments company. A lot of people use Square now. I think they've got 4 million merchants in America alone. Big company. He owned Twitter. He sold it to the socialists. The socialists ruined Twitter. Elon Musk bought it out and then basically took the shackles off. And now it's right-wing, apparently. Anyway, so he's had Square Payments now supports Bitcoin payments, which is absolutely fantastic. And, of course, this is the kind of thing we want to see. Again, I'm not the thing with Square and accepting Bitcoin payments is I'm kind of on the fence when it comes to using Bitcoin as a payment solution, because Lightning Network was built to allow Bitcoin to be used as payments, and I like the noble concept, but I wouldn't go into a shop and buy something with bars of gold, which is a store of value, and I wouldn't go into a shop and buy something with Bitcoin. I would buy it with stable coins. I'd buy it with USDC and USDT. I wouldn't buy it with Bitcoin. And I wouldn't buy it really with Ethereum either. I don't see them as payment solutions. But I do like the fact that you can pay for things in crypto. So I'm kind of like, one of the things I'm on the fence with, I'd understand entirely if you wanted to put your money into Bitcoin and use it to buy your shopping. I totally get that. And I'm probably more old school because I had an investment portfolio from the age of about, I don't know, 20, 25 maybe. And I always consider Bitcoin as a store of value that goes up over time. So the thought of selling it is abhorrent to me. But I totally understand if you've got $100 or $200 worth of your own local currency, euros, whatever it might be, you put that into Bitcoin, you put it on a wallet and you go and pay for things with. Because over time, it's not going to move that much. You know, when we talk about these Bitcoin price moves, they're only 5 or 10% to the upside or the downside. So your $100 or $200 is only going to move by about $10. And, you know, I kind of get that. But this is adoption. This is what we want. This is adoption. And everything needs to be on a system that accepts stable coins and Bitcoin and everything else. And I kind of get that. I do. But the other good thing about this is, of course, the way that credit cards sting you is in the conversion rate. So if the euro is 120 to the pound, they'll give it you at 118 to the pound. Or 122 to the pound, whichever way it works out at. And then vice versa, if you're going from pounds to euros, they'll give you 118, not 120. So they make their 1 and a bit percent there. When you buy with Bitcoin or sell with Bitcoin, and you're doing it Bitcoin to Bitcoin, then there's no 1%, 1.5% spread there. So that's a good thing in terms of allowing it. Again, with stable coins as well, if you're selling something and you're selling it in euros, but you want to accept stable coin dollars, then of course you can instead of getting it $15 to €9, you can get $15 to $15, which is worth €10. So I kind of understand where he's coming from, and he will take a fraction of a percent from that. So I think this is a really, really positive thing. I'm not a massive fan of Jack Dorsey, in all honesty. I'm sure he's a really, really wonderful man. I just don't like the image. I don't like his image. It's very cultish with an L for me. Right, let's move on very quickly. How long do we have left, by the way? I seem to have ranted an awfully long time. 24 minutes. Good morning, Joel. She'll be taxing the landlords again. Do you know what? I have a solution. You should not be allowed to own more than 5 properties in the UK unless it's a block of flats. And if you own a block of flats, you shouldn't be allowed to own more than 12 of those flats, for example, right? You can argue about the numbers, but around that. And the reason for that is the likes of BlackRock will come into a country and buy the housing stock and rent it out. And for me, that's wrong. And that, I mean, that's pure capitalism. They come into the UK and they buy 100,000 homes, they take them off the market, pushes the house prices up, which makes those houses worth more, and then they charge you rent. I don't agree with that. I think that is absolutely wrong. And I'm all for limiting, not killing the rental market, because there are people that want to rent. I don't want to buy a house. If I've got a 2-year contract to work in Glasgow, I'm certainly not buying a house in Glasgow. I'm going to go and rent. And there's lots of transient people that go back and forth. You always need rental stock. And the issue is the likes of BlackRock. They've done it in America and they're going to do it in the UK. They're going to do it in London. You have to put a stop to that, because that is going to absolutely ruin the market. And the other thing you could do is you could stop houses being bought by companies or trusts. Those two things, for me, irrespective of the outlier issues around that, would solve a massive problem, okay? Because I don't personally believe that anybody should own 500 houses or 200 houses and rent them out, because you are taxing and destroying the wealth of kids. And I think that's wrong. And the other option is to build houses. But all that's going to happen when you build more houses is BlackRock and big housing companies will just buy them. And even if the kids buy them, which is a good thing for them, they'll just be made an offer they can't refuse. They buy a house for £150,000 and somebody comes along and offers them £225,000, 50% premium. Those kids will sell. And it ruins the market. So I think this is why you need a mixed market. I do believe the housing market could be fixed with a few simple things. And I don't care about BlackRock taking the government to court, because the government can just overrule them. You talk about courts overruling the government writes laws, and it's signed off by the King of England, which is obviously an irrelevancy, but that's how it works. So when you hear, oh, the government will lose in the court, the government can just rewrite laws. That's what they're there for. They're elected. It's a democracy. And that goes for America as well. I know America isn't a democracy, it's a constitutional something or other, but you get the idea. Now then, let's move on. When I find this, there we go. XPL rallies after Plasma reveals collaboration with Daylight Energy. One of the big things about when you move into a new layer one, or a new layer one comes out and the price rips up and everyone thinks it's going to go to the moon and then it dumps, everyone calls it a crap coin. Okay, I get that. But they've launched their coin, they've launched their chain. It's doing a lot of transactions at the minute, and it needs 50 to 100 different collaborations and deals for it to really take off. And if you're going to say to me, is Plasma, which of the two is going to be here in 10 years' time and winning? Is it Plasma or Cardano? Plasma. They will win. They will win on volume, they will win on metrics, they will win on the motivation to do this, because they're built for a singular reason to exist. And that's what we talked about many times before. Why does a chain exist? Why do we have Solana? Because it's like an outlet village. It's cheap and it does things that are pretty cool and it sells things at bargains. Why does Ethereum exist? It's going to exist at this moment in time to power the Web3 version of BlackRock and Goldman Sachs and everybody else. Why does Plasma exist? It is a stable coin layer one transaction blockchain. That's why this exists, and that is why you should really go and look at it. Now, full disclosure, I don't even know how many I hold. Maybe $50 of this token. I know a lot of people out there go and look at these coins and they go and invest in whatever. My portfolio is 99% top 5 or 6 projects. Ethereum, Solana, Bitcoin, a little bit of Cardano, a little bit of XRP, and then some coins outside of that. So when I talk about this, I talk about it from the point of view, if you've got an alt portfolio of projects that are going to be a success for you, I'd have to put Plasma in there, and ARK as well, this is kind of the Tether payment solution. Then ARK is the Circle solution. So you have two different payment chains. And don't believe for 1 minute that there's only ever going to be one winner. We've got Visa and MasterCard. We've also got American Express. Multiple credit cards can exist, and multiple payment layer ones can exist. So don't fall into the trap of listening to your favorite call tell you, this is going to be the winner, with his sunglasses on and his flashing lights behind him. There will be multiple winners across multiple different niches. We talk about Maple Finance. It's done a 12x in assets under management this year alone. That doesn't mean that Ondo isn't going to win. It doesn't mean that other real-world asset projects aren't going to win. There will be multiple winners. This is not a horse race. There will be multiple horses that win these races. Now, what this is going to do is allow for multiple different types of stablecoins to exist for different markets, but also allow for yield to be generated, because obviously now at the minute it's also got Maple Finance's Syrup USDT token, or sorry, USDT token on there, which is a yield-bearing dollar asset. It's not a stable coin. So it's going to have some element of DeFi on it as well. You will be able to trade between tokens. Now, the XPL token has surged. Following the announcement, it rose 10%, trading at 32 cents. It's still nowhere near my kind of long-term price for this. I was buying it at 60 cents. I think it launched at 70 to 80 cents. I was buying it at 60 cents. 32 cents, I'll probably buy a little bit more of this. But again, not a lot, just to have some skin in the game, okay? It's got a market cap of $607 million. How many layer one payment stablecoin blockchains that will run trillions of dollars over them backed by one of the top 2 stable coins in the world. How long do you think it's going to sit at $600 million market cap for? Not very long, in my opinion. It could 5x, and it would still only be a $3 billion market cap. Maybe that's even undervalued at that price. Well, that gives you a price of $1.50 for XPL, for example. Just rough numbers, obviously. So according to Plasma, which is a total TVL locked at 2.7 billion, Grid will be issued by M0, fully backed and redeemable instantly. Meanwhile, S-Grid will allow holders to earn yield based of Daylight Energy's electricity revenues. Again, this is the clever stuff that you need to go and look at, okay? Earning yield on assets that aren't going to go to zero is probably something that's been really missing from crypto for a very long time. We've seen Orca and we've seen Radium list tokens that pay you 25,000% APR that pretty much go to zero over time because they're not backed by anything but hope streams and NFTs. These are real companies making real money and in effect paying you a dividend. That's the closest way to look at this. And then your decision to make is this company, what are they called again? Daylight Energy? I think they're called Daylight Energy. Your decision then is Daylight Energy a company that's going to continue to grow in value and pay me this dividend? And if the answer is yes, you go and buy S-Grid, not financial advice. That's the way I would look at it. But these are big boy companies doing big boy things. These are the things we want to have the choice of. Believe you me, I don't want to sit here talking about a pixelated monkey being worth 0.1 ETH and paying you out in monkey token. I really couldn't care about it. This is the stuff that's really, really going to change your life. And that's important. Energy is always going to be required. Water, commodities, always going to be required. They're offering to pay you a yield for holding their token on a payments blockchain. This is serious, proper, good, solid stuff that you need to be taking a look at. Now then, let's move on. We've got a couple of things to talk about, and then we're going to move off. I feel like this has been a very grown-up show today. I feel like we've done some very grown-up things on here, and we've solved the housing crisis in the UK, which I believe is fantastic. I'm long on AVAX for $17. Am I screwed? No. Lloyds Bank are hoovering up homes left, right and centre. Exactly. We shouldn't allow this to happen. We shouldn't allow it to happen. AVAX, but going back to your comment, I made a comment years ago, probably about 3 years ago, with the Oracle. And I said, because I think FIFA were going to launch a project with AVAX. And I made a quip at the time and said, they basically, you probably don't have the yellow pages. You've got telephone directories in your country. They're big encyclopedia-sized books. And I think, and I said at the time, that FIFA opened the book and went down the list of blockchains and got to A, which was Aave, or Avalanche, sorry. And then they phoned them up and said, we are FIFAs. We'd like some of those NFT things that you do, and we want to put some pictures on the internet. And AVAX was one guy in a room who fell off his chair backwards because his phone hasn't rung in 6 months. His phone goes up in there, he catches it. Yeah, we can do that, okay? That was 3 years ago. And that's when I bought AVAX. I think it was like $3 or something. $19 is way below the $30 price that I think it got to around that price. I don't think you're screwed. I can't give financial advice, clearly, but I don't think you're screwed. What I would say, though, is when it goes up, don't sit there and think it's going to $300 because you'll turn into Gollum, okay? And you won't let any of your precious tokens go. And that's the problem. It's not the problem holding through the bear market. It's the problem selling the top. Nobody sells the top. So my advice would be to have a price in your head that you will sell your AVAX for. That's what I would do. The same with Ethereum. Say to yourself, if Ethereum goes to $7,000 or $6,000 or $5,000, I am going to sell some of my Ethereum. Take some profits. And I'd say the same thing with AVAX. Maybe 50, 80, I don't know, $90, $60, something like that. I'm going to take some profits and just sell some. You know, it's not binary. The world has become so binary. It's not binary at all. You sell 10%, you sell 15%. We've done dollar cost average videos probably 3 or 4 times now. If you've got $100, so you've got 100 AVAX, let's say, and we appear to be going through an alt season. Let's say we start going through an alt season and AVAX starts to hit $40 or whatever it might be. Sell 10 tokens at $40. And then if it goes to $42, $45, sell another 10 tokens. And it might go to $50. You sell another 10 tokens, but then it comes down to $47, and guess what? You sell another 10 tokens. And then at the end of the bull run, when AVAX is back at $19, you can look at your portfolio and say, I've got an average price of $40 for my AVAX. And in the bear market, when it's at $5, you can say to yourself, do I buy back into AVAX? Do I believe in the project at $5? Well, I was selling it at $40 and I was holding it at $19. I think it's got a good future. I'm going to start buying it again. And then you know what you do. You buy 10 tokens at $5, 10 tokens at $7, 10 tokens at $9, and then you dollar cost average back in the same way you dollar cost averaged out. That's how this works. You're never going to sell the top of anything unless you're Richard Hart. You're never going to sell the top of anything. Let's say Bitcoin goes to 150,000 and you start selling at 130. 130, 132, 134, 138, 140, 142, 144, 148, 150, 145, 142. You'll come out with an average price of maybe $140,000. That is as good as you're going to get. That's as good as it gets, okay? So you're never going to time the top. Don't beat yourself up about selling based on the fact the price is going to go higher, okay? If you sell your house, you know without a shadow of a doubt that 20 years later your house is going to be worth more, because houses go up in general over a period of time in most places. But you're still going to sell your house because it's a good price for you to sell your house, or it's a good price for your house to be able to go and buy another house. Well, guess what? You sell that AVAX at $40, $45, $35, wherever it is, and then you put all that into Bitcoin. If Bitcoin comes down to $60,000, that will then hold better through the bear market than absolutely everything else. And then you hold Bitcoin until you want to buy back into AVAX. And then you buy back into AVAX with your Bitcoin, which has held its value. Or you're holding stable coins, whatever. But I would hold it in Bitcoin. That's how I would play it. Now, XRP Ledger gets MasterCard boost as payment grant. Giant tests RLUSD for Gemini card transactions. Again, XRP is dead. XRP is finished. XRP is centralized. I have heard it all before, and I am a convert, okay? I've gone vegan. Let's compare that. I am vegan when it comes to XRP. I don't like most things about XRP, apart from the fact that it's going to build in value. And therefore, as I said yesterday, I can't ignore XRP because I think the price will go a little bit higher in this bull run, maybe $5, $7. I've bought at 35 cents, 30 cents, 40 cents, whatever it might be. So I sell at $5 and have 12x on XRP. I am delighted. Okay, now they have teamed up and they are going to power the stablecoin transactions on Gemini cards. Brilliant. This is what we want. Gemini cards, by the way, as far as I'm aware, they are the ones that Gemini are offering the Ripple card. They're offering a Cardano card, I think. They're doing a Bitcoin card. So all of the kind of the crypto cards that pay you cash back in that particular cryptocurrency, I think a lot of them are going to go through Gemini. So this is a big deal. I mean, what do you want me to say? XRP is going to go to 50 cents. Look at the writing on the wall. Okay? That's the way to do this. Look at the writing on the wall. Okay? XRP is going to be a big company. It is going to do multiple different layers of transactions for the banking industry, the card industry, everything else. Don't fade Ripple. Don't fade XRP simply because you don't like it. And I know a lot of you don't like it, but you know what else you don't like? You don't like medicine. And you know what medicine does? It makes you better. And holding XRP from 30, 40, 50 cents to now is just taking good medicine, because it'll make your portfolio better. Think about that one. Now then, I did put in here Binance bots, and I'm sure a lot of you were thinking it was something totally different. Hello, fingers crossed on GRT, indeed. I don't agree they should be allowed to buy housing. $2 billion worth of housing stock is an awful lot. I don't know how many houses that is. 1,000 houses, maybe? Binance integrates trading bots and USDC pairs in latest market upgrade. Again, Don't know if you remember me telling you yesterday about centralized exchanges are going to cannibalize DeFi. And that's one of the two moves that they're going to make. So Binance is going to do this. Okay, so imagine that you're seeing my hands go out and up. They're going to go across verticals and they're going to go across horizontals. And that's like a business term. So the supply chain, they're going to try and take over the supply chain and become a bank. And that's the retail side. And they're going to try and cannibalize DeFi. And that's the DeFi side. So they will have DeFi, sex trading and banking all under one roof. They'll do stocks, they'll do shares, they'll do direct debits. They will do a card so you can go and use your Binance card. And they will go sideways. They will buy other exchanges that do different things. They will do custody for these treasury firms. They will do all of these things. And these things are not a bad thing to do. Now, for me, one of the ways to cannibalize DeFi is to go after trading bots. Now, a lot of other smaller sectors have had trading bots in the past. You have, Bitcoin Alpha trading bots, and you've got DCA trading bots and stuff like that. And they are not a panacea. They are not going to solve all of your problems. They are dumb terminals that follow a set of commands. That's what they do. And some of them work really well, especially if you pick them on maybe some of the lesser known coins. So if you use a trading bot on Binance, for example, you could get yourself a Floki trading bot, and I think that would work incredibly well and give you incredible returns because they are more volatile assets. I'm not a fan of trading bots when it comes to things like Bitcoin, Ethereum, Solana, and the top coins, because I don't think there's enough volatility in those coins to warrant using a trading bot. But I would certainly look at meme coins on Binance, look at Binance Alpha maybe. So I'd certainly look at that. But this is I'd say it's a big move. It's a kind of a catch-up move. But it's just one more reason to use Binance and not use DeFi. And for me, that's perfectly fine. That's what Binance should be doing. The same way I said yesterday about Aave and Binance offering Aave products through Binance. That would be another move that I would make. Opening up Binance Alpha was another really good move. You've seen other exchanges with bolder people than Richard Teng offering the same kind of thing as Binance Alpha. You've got rumours that other centralized exchanges are going to offer access to their chains as well. So you can see what's happening, and the kind of it's blurring the lines between a centralized exchange and decentralized exchanges and DeFi, like Aave and things like that. Bringing them inside of Binance, it's like, why would you leave Binance? It's like a 15-minute city. These things that they have in various different places. If your coffee shop, your supermarket, your football stadium, your burger joint, your gym, if they're all within 15 minutes of your house, you're less inclined to go anywhere else. If Binance offers everything to everybody, why would you leave Binance? That would be their strategy that they're going to follow, and I agree with it. If you've got all of your crypto and your banking and your stocks and your shares under one roof and you trust in that company, why would you go anywhere else? And this isn't an advert for Binance, by the way. You can take what I'm saying and apply it to any centralized exchange. So they've added USDC pairs. That's don't really care about that. Trading bots have been enabled to boost liquidity and automation. Move strengthens Binance's long-term USDC strategy. Again, there was a big problem on Binance under the previous administration where they forced Binance to get rid of BUSD, which was powered by, was it Paxos or somebody? And then they basically forced BUSD out of business, which I think was a terrible thing to do. And of course, since then, Binance are trying to find a solution, a bigger solution. Personally, if I was Binance, I'd bring back BUSD. I'd bring it back. Absolutely, why not? Power the BSC chain, use it on their exchange, offer a yield on it. Maybe don't call it a stable coin. I would look at bringing it back. But this is really, really good for Binance. Really, really happy that they've got this stuff in there. It's not something new. It's not revolutionary. So I'm not going to spend too long on it. I just want to let you know. And I would go and check them out as well. Go and look at the trading bots, see what's available. And what I would do with a trading bot, I wouldn't call it gambling. I don't think it's that far. Predictions markets are gambling, but I wouldn't call trading bots gambling. I would go, let's say you've got a $10,000 portfolio. I would go and take $50 of my portfolio and I would go and have a play with a trading bot and pick a coin that you like and go and use that. Good morning, Mr. T. I hope you are well. Let's have a little look on here. Don't forget, by the way, if you are watching us for the first time and you are on YouTube, give us a follow and a subscribe. If you're watching us on Binance Square, do the same thing. Give us a follow. I think we could get close to 10,000 followers on Binance Square by the end of the year, which isn't too bad. I think we're at 200,000 followers on Binance Live, but we don't stream there anymore. And I think we're probably... I don't think we're anywhere near 7,000 followers on YouTube, so that would be a great help. Now, the Bank of England proposes new stablecoin regulations. Now, I don't know how I'm going to keep a straight face telling you this, because I know why they're doing it, and I'm going to try and be level-headed about it, because that's what I would expect of me watching me. So the Bank of England is proposing to limit $20,000. That's the limit you can hold in GBP stablecoins. Okay, so it's a new stablecoin regulation impacting asset composition and holding limits. 60% short-term bonds for reserves and $20,000 limit on individual stablecoin holdings. Now, I've read this already. It's $20,000 for people, and I think it's 10 million. Sorry, £20,000. I'm so used to saying dollars. £20,000 limit on individuals and £10 million limits on companies. Now, there is a damn good reason why this is in place. And it's the same reason why they have these different types of laws in America. In America, a stablecoin cannot pay you a yield. Because if Tether and Circle paid you a yield of 4%, it would destroy the banking industry in America overnight. It would be finished. If we allow everybody in the UK to move all of their money into stablecoins in GBP, it would empty the banks. There would be a bank run. The entire banking system would crash. Now, a £20,000 limit doesn't affect the average man in the street. Let's be very clear on that. The average man on the street is likely to not have more than £5,000 or £10,000 worth of savings. And if they do, they're in cash ISAs. So there isn't a real threat to the average man in the street with this, or woman in the street. But of course, they don't care about those people. They care about the people with 100, 250, 500,000, £1 million deposits in banks earning 1 or 2%. That's what they care about. Or leveraging it to get loans to buy properties, whatever it might be. So they're not going after the individual here. They're going after the high net worth individuals. Because if enough high net worth individuals take their money out of the system and put them into GBP stablecoins, it's ruined. Now, that's on the positive side. And that's why they're doing it. On the negative side, my question would be, why don't you just turn all of the pounds in England into GBP stablecoins, but without any control whatsoever over the freezing of that? So what I would do is I would say, right, we are going to have the Bank of England issue GBP stablecoins. And they're going to be able to mint it, print it, whatever they want to do with it. The same thing they can do now, except it's on the UK blockchain or wherever it might be. It's not a CBDC, technically, central bank digital currency, which can be controlled. But it is a way of allowing people to just have... So somebody doesn't care if they've got £10,000 in a GBP deposit or £10,000 in a GBP stablecoin. And then the next question would be, why don't you allow people to have this in their bank account, and why don't you pay a yield of say 4% on it, and then why don't you let the bank take 1% and then the individual take 3%, and get rid of the sham that is savings accounts in the UK, which pay you 0.5%. All of those things, I'm probably get some economist who can quite rightly tell me why none of those things would work. But if they don't work for the UK, why do they work for America? That would be the next question I would ask. Why don't they work for America? It works in America. Why can't it work in the UK? We don't have a different system. It's still money. Money works in different ways. Give the banks, who they're trying to protect, a yield on GBP, and they pass on 75% of that yield to the individual. And 3% on £10,000 is, what, £25 a month? Well, that pays for your BBC TV licenses, if there is such a thing as the BBC anymore. The Bank of England proposes new stablecoin regulations, including asset backing and holding limits, aiming to strengthen the financial stability in the UK's crypto sector. If implemented, these measures could significantly impact stablecoin operations and market dynamics as issuers adapt to the stringent requirements on asset allocation. Another thing is, when I'm talking about pounds, you can change that to any currency that you are in: dollars, euros, pesos, whatever it might be. The point of the matter is not that it's in pounds, but the fact that these are the limits. It's just, maybe they'll do it over time. You've got to give the Bank of England a lot of credit, and I'm a big fan of the Bank of England because it works independently. It's not quite like the Fed in America. It works independently of the government of the UK, and that was one of the best things they ever did over there. And they have got very, very clever minds in there. So let's not, these are clever people. So the Bank of England's proposal aims to regulate stablecoins by requiring to hold 60% in short-term UK government bonds, at least 40% in deposits at the central bank. Individuals have a £20,000 limit, and businesses can have £10 million. The regulations focus on maintaining financial stability. This is the thing that everyone's been laughing at. Okay, so you have all of these influencers online telling you, oh, the UK's cooked, the UK's finished, blah, 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 blah. You can't deregulate the entire financial system because you've got flashing LED lights behind your head and you wear sunglasses and you've read an economics book when you were 18 years of age. Okay? Doesn't work this way. It would cause a bank run, and probably 75% of banks would go bust overnight. And then guess what? Who would bail them out? The Bank of England. And then who would bail that out? You would, as a taxpayer. So by you wanting this, you're causing your own downfall. The same way we talk about government debt. Who owns a lot of government debt in the UK and America and everywhere else? The pension funds. Who owns the pension funds? Surprise! You do. You own the pension funds. So the government spends your money on you and uses your money to spend on you and then pays interest to you in your pension fund. The biggest criminal activity, if we're going to talk about criminal activity, is a 2 to 3% inflation rate. Inflation should be zero. And then your goods wouldn't cost you any more money. And we could get to the point where it becomes deflationary, but we don't want to talk about that because politicians would absolutely lose their minds because they would claim that their economy is shrinking. But guess what? The economy might shrink, but your standard of living would go up. Potentially. Not necessarily. It's a lot more nuanced than that, but you get the idea. 2% interest over 50 years is over 100% because it's compounded. Let's call it 40 years at 2%. So 40 years, which is roughly your working life, the value of the money that you have today goes to zero. If it's 3%, it's likely 25 years. That's why they don't want 3% inflation, by the way. So in 25 years' time, at 3% inflation, your money in your pocket is worthless. Why did your granddad buy a house for £15,000 and now it's costing you £300,000? Have the house prices gone up, or has the value of the money fallen? The value of the money has fallen. And that is why a cash ISA is an utter waste of time. Holding cash is an utter waste of time. That's why if you can get 3% on your money via a bank and inflation is 2%, your money will hold value for the rest of your life. That's why people buy gold. If you buy your house, and I see people talking about this all the time, about buying a house is stupidity. It's absolutely the worst piece of advice you can ever be given. Owning your house gives you an inflation hedge, it gives you an asset, it gives you collateral, it gives you a home, okay? Because if you rent, guess what? The person who owns your house can put your rent up at the drop of a hat. And you're paying, what, 55, 60% of your income to a landlord. Or you buy a house, and over time, the mortgage comes down. And over time, your wage goes up. That's why people in their 50s are so rich, because they don't pay for their property. My mortgage, and I keep a very, very small mortgage, my mortgage is £250 a month. My mortgage is £62.50 a week. That's what I pay to live in this house. £62.50. and you're paying €1,000, €2,000, £1,500 a month in rent. The biggest lie you've ever been told by these social media influencers. So anyway, I think we should probably stop with my lectures. I sound like some kind of like preacher today. I don't know what's going to me. Thank you, your lovely live stream. Network issues. I hope I'm okay. Yeah, I'm fine. I can see I'm fine. Right then. So I am not streaming tomorrow day. I'm streaming tomorrow night with the Oracle. Okay. Now the Oracle is our trading guru, who you know what I need to do? I have a little slideshow on the screen so I can bring up his stream. But basically, the Oracle streams 3 times a week, Monday, Thursday, and Saturday at 9 p.m. So 9 hours from now, he streams and he talks about Bitcoin, Ethereum, Solana, XRP, Kronos, or Crowcoin. He talks about all of that. He does that 3 times a week. What I've said to him is, his stream is a little bit like Ed Sheeran playing in an empty room. Okay, now we've just bought some software today. Oh, no, sorry, not today, yesterday, that will make shorts, because we're now going to start clipping him and putting him out into the big wide world so people can see what he is saying. And we're going to start doing that from last night's stream. Now, it doesn't matter if he's wrong, doesn't matter if he's right, doesn't matter if he's called it. We're going to put him out there so people can see. We're not going to use that software on these streams because all you'll get is me trying to preach. And we don't want that. So we're going to use them on in the trenches, and we're going to use them on his streams, and we're going to try and push his content out there. Because if you don't watch the Oracle and his trading and his chart shows, I don't know what you're doing. You're watching me rant about Rachel Reeves, but he talks about the charts. He talks about Bitcoin going up or going down, or Ethereum going up or going down. And over time of watching him, you'll also learn an awful lot. So make sure you tune in and you watch him. Anyway, I think that's enough from me. I've ranted plenty of time. So thank you all for watching. You are all wonderful human beings. And remember this. This is my final thoughts of the day, right? There are people that exist in the universe who love you and you have never met them yet. Think about that. Think about that positive way of going into this week. There are people you haven't met that will love you, okay? Now, maybe not love you as a wife or a husband, but love you as a human being. And you just have to meet them, okay? So don't be put off by a lot of things that you're told in this universe. It's all a lot of crap. We're all good human beings at the end of the day, with a few bad ones thrown in for good measure. He needs to start a course. I absolutely agree. Now, KB, we have a question. I'm glad you said that. We asked somebody, we're not going to reveal their name. We asked somebody to give us some feedback on our channel. And we asked this person because we believe they're one of the best people to ask, because they watch a lot of our streams. And they gave us some golden nuggets, which we're going to try and implement into the streams starting from, well, we're going to do, we'll have our meeting in the Wednesday meeting in Jurassic Park. It's still going to go ahead. I might film that again. I want to start trying to implement some of the things he suggested. Not all of them, because I don't know how I could do some of them, but we're going to do a lot of them. If any of you out there, so that's Packer who watches these streams on Backup, Kishan who watches KB, even Villain Bear, if you have any constructive comments, so don't call me bald, okay? We all know that, okay? Don't say I need a shave, we all know that, but this facial hair makes me look sexy for the older lady, right? If you've got any constructive feedback, let me know. Okay, if there's things that you think we should do you watch somebody else and you think, I wish Mike and the Oracle spoke about those things? Let me know, because we don't want to keep doing things over and over again that you don't like, number one. And number two, if there's things that you want us to do that we are capable of doing, then we will do them, okay? Because at the end of the day, yes, we started this channel because we wanted to talk about crypto, but we started this channel because nobody else was doing what we do. That's the long and short of it. I used to watch Altcoin Daily, George, BitBoy, and they were all American. And they all had that American attitude and American positivity. And I'm not saying that that's a bad thing, but they all had the same style. And we thought we could do something different, which is miserable, English, downtrodden negativity. That's what we thought was missing in crypto, and that's what we've done. We try to be realistic. We try to sleep well at night. But if there's things that you want us to do, let us know and we will try our best to do them. For example, the dog quiz. Okay, it's got nothing to do with crypto. I might have a few crypto questions in there. It's going to be a bit of fun. And we're going to give away dog NFTs, which will be worthless, but it's about fun. Don't come on this stream expecting us to give you $1,000 a stream, because guess what? We are not that big. Okay, we're a lot bigger than we were a year ago, and a lot bigger than we were 2 years ago, and we're going to be a lot bigger next year and the year after. Okay, but it's all a journey. So if there's anything you want to say, KB, Kishan, Danny, Manjeet, Tariq, let me know. You can put it. I'm more than happy for you to put the comments into Telegram or the OG Telegram group. I'm more than happy for you to put it onto Binance Square under the stream. We don't care how you let us know. Just let us know, and we will try to add or reduce whatever it is that you want. So I know Manjeet doesn't like the speed at which the Oracle talks. I know that. I saw that comment last night. Bro, you speak quickly, I think he put, which was quite funny. But anyway, let us know, and I'm going to go and get some dog questions ready for tomorrow night. Thank you, everybody, for tuning in. Stay safe and ignore the hate.